All right. Good morning, everybody. Another week. NVIDIA's got earnings this week, and we continue to see the F-13 filings showing large funds that have been getting the hell out. It makes sense from just how much it's run that there's going to be an exodus at some point. The latest one that I saw was Peter Thiel. He dumped 537,000 shares, which was nearly 40% of his portfolio. Talk about over allocation, huh? So we're going to get some delayed data this week. And with NVIDIA on the table, I've seen NVIDIA's earnings go two ways. There's those earnings where we don't do a darn thing Monday and Tuesday because we're waiting on NVIDIA on Wednesday. It was one of the narrowest range weeks that we had in a long time, the last time I seen that. Then there's the other kind of week where it's like business as usual until Wednesday morning, and then we kind of went sideways into the earnings close. So we have to see how it's going to play out. Just keep in mind, it's not guaranteed that we know exactly how it's going to behave. It might be hurry up and wait, or market might just say screw NVIDIA and is going to do what it wants to do. Sometimes we just don't have the answer. Hong Kong down more than a half, Japan close to a half. Lots more eyes are turning towards Japan. You know, they elected that new prime minister. She's like a firebrand. Well, she's all lit up. And they're changing their entire system around. They're going to join the rest of the world in the idea that they can spend their way out of debt. And just let you contemplate that for yourself. But with everything that they're changing, there will be consequences, right? Because there always is. You change something, there's a ripple effect. How bad it's going to get, or will it get bad at all, remains to be seen. But there are a lot of changes coming out of Japan. Someone was asking where they could get information on that, and I generally get a lot of my Forex news from FX Street. So this isn't a bad place to go. I'm not even logged in, and you can catch headlines, just kind of stay current. And then, of course, Finance Juice. The NASDAQ is up the most, but barely at 0.25%. Kind of leading us to that hurry up and wait scenario at this point, where we're just really not doing anything yet. We are going to get some delayed data. And I think they said that we were going to get this this data here on the 20th. So they're trying to shuffle things around. We get the minutes this week, also on Wednesday. For new traders, this is not FOMC, right? I've seen that mistake. New traders get the two mixed up or think they're both the same thing. This is just the FOMC meeting minutes. It's not another FOMC meeting. The job numbers coming in the later part of the week are going to be a really big deal. The Fed has a dual mandate, and that's one of the two. So these are really important to keep our eye on, and they're likely to be as impactful or important as NVIDIA's earnings. We've been in the dark, so people want some numbers. They want some clarity. We got auctions in the front end today, but they're really close. So you could use something like the IRX. Just keep your eye on that one. Watch all those front end ones. Otherwise, just a lot of Fed chipping their teeth without a whole lot to really contribute. One thing that we've been watching through all of this is CTA positioning. The white line in the back is the S&P. The green line basically is the CTA's fund and how much is allocated into the S&P long. That's just the easiest way to think of it, right? Just don't overcomplicate this. So as long as they're adding and they're still long, then this continues to go up. But when they quit adding and they either hold tight or they start to decrease their position, then this goes down. And you can see that we were in that holding pattern. And now they're reducing their position size even more, getting some more risk out. I know this is considered smart money, but you know, take it with a grain of salt that oftentimes they're early or they're just straight up wrong, just like anybody else, right? There's a really good one here where the S&P was running and they were allocating. We had a 3 to 5% pullback and they dumped. And while the S&P ran up, broke highs and went even higher, they liquidated even more while it was continuing to go up. They were continuing to get out. So I think it kind of proves my point that just because they're getting out here doesn't mean that they're right or that the market's got to go down or that they know something you don't know. I mean, it's very likely that they will know things before us because they have a team of researchers and analysts on the payroll telling them what's going on and finding all the little things behind the scenes that are important to keep our eye on. But they are not some all-seeing, all-knowing entity that's got it all figured out. Pretty much a fool with a magic 8-ball. We are under the 10 and the 20. We can see that out here on a daily. Just go out here for a moment. It's just something we need to focus on anyways. So we got that high. We had the pullback. And the questions last week were, how were we going to resolve this run up? Would we end up getting an equal high, a lesser high? And we ended up getting a lower high. And we've rolled over and we set this higher low, but it doesn't count yet because we haven't gone anywhere yet. We need to leave this range, look back and say, oh yeah, hey, that was a higher low. Until we do that, it doesn't count. Otherwise, this reflexive move back up on Friday, if we can't get above Friday's level, we can come right back down, break Friday's low, and this would just be the continuation of one move from that pullback, roll over all the way down, break that low, and go to this next low. So we don't know yet. There's always somebody who wants to try to trade it on the anticipation that we can guess which way it's going to go. Your guess is as good as mine. If you're going to make guesses, then just use yours, right? That way you can take the blame if it doesn't work rather than blaming somebody else. Here's the halfback. As long as we're holding above the halfback, we have the capacity to go up and break Friday's high, get through this tangle of moving averages over our head, and continue that push to the upside. the goal would be to get back to, what is that, Thursday's open. Even Thursday's high if we can get it, but Thursday's open be a good start. 68.92 cog line. Imagine that. So yeah, Thursday's high works. It's a cog line. So if we can get through the moving averages, we'll aim for that. The problem is the moving averages are outlining the reversion, right? Put that on for a minute. So when I get my mouse out of the way, you can see we're running reciprocal swings. We'll see what we get out of it. Even those break at some point. If we can get under the 50, then we want to test the 66.50, and then we go to 65.50. Otherwise, we get through the mid of Thursday, which is basically all those moving averages, test Thursday's high, and then we got 69.50 to deal with. To the downside, we've got the 10-week moving average, 67.11 cog line, and the put wall, 66.68. So we got some decent levels down here to interact with. Got an options level, 67.21. Lots of drama. Trading at 176,000. The average that we want to see is generally around 55 to 65. So seeing 175 is really elevated, right? So they came in and they put in a lot of work last night. Excuse me, on Friday. Last night's 84. How did I catch that one? All right, well here, this is where we're at. 85,000. That makes me feel a little bit better. 175 this morning would not have been good. I think I'm just going to add a little label over here. Let me make a note. All right, so that put wall is our last line of defense and the only thing that we have. Below that, we don't have any moving averages. We got nothing, right? So 55.50 would be the next stopping place. All right, we got really close to the upper ADR last night, or to the ADR half, and we didn't get it. We also attempted an inside day breakout, and we didn't keep it. The one thing at a time. Getting an inside day breakout and not keeping it, it's not really that big of a deal on its own. But one thing we have to be mindful of is how it rejected. Because if it ran up there and just rejected a little bit, it's likely to give it another try. When it runs back up there and it rejects more harshly, we go back to, say, the low of the morning, it's going to become a lot more critical that it comes up and breaks that previous high or else. So we don't know if we're going to run back up or not. We want to see how it digests this low. The fact that it's going to test that low is pretty self-apparent at this point. So that's one thing. That's the inside day breakout. The other piece, getting really close to the ADR line but not hitting it, I don't like to really split hairs on this. Those two red lines are an average of our move over a month, right? Our daily average move. It's not supposed to be to the tick, set in stone, exactly perfect. We got really close and flipped it. And it's likely that we're done with it. And so that brings us to the phrase, if we go to one side early enough, we can go to the other side by the end of the day. That's not bullish or bearish or anything like that. It's just wave function. It's how price moves. So if we take out that Globex low, we're going to target the ADR half on the downside. And if we make it through that, then the full ADR and Friday's low. Not really helpful, but there's the mid. All right, we are underneath the weekly pivot, and it's, relatively speaking, a pretty narrow channel for that weekly pivot. A narrow channel implies that if we break out, it could grow legs and we could really run. But be mindful what it's talking about here. It's saying if we break out on a weekly, then we could break out and keep the breakout and really run on a weekly, because that's a weekly floor pivot. So we would first need to get outside of last week's range and then really run. Keep in mind that that channel doesn't make price do anything. So even if we do get a breakout, it won't be because of this. And if we keep the breakout, it won't be because of this. The daily pivot is lower than Friday's daily pivot. That's bearish. Price opened above it. That's bullish. They kind of cancel each other out. Friday's channel was wider than today's channel, but they're both pretty wide, all things considered. Wide channels imply that if we attempt a breakout, that it doesn't stick. Well, we already tried a breakout and it didn't stick, but we need to see if we're going to run back up and try it again or not. I'm fairly confident we're going to run back up and try to break it again, get a lower high, not just this little lower high that we got here, but a more robust lower high. Maybe not. We'll see, but that's my base case sort of expectation. So we'll put in a lower high, and I got this sneaky suspicion we're going to go sideways this week waiting on NVIDIA. Barring any headlines, of course, that might come out. Some unknown unknowns that we can't anticipate at this point. All right. We didn't make it to R1. We failed early and faded away. So if we do make a run for it and we happen to get through our Globex high, R1 is the target. Otherwise, this failure to reach R1 implies we'll get back to the floor pivot and actually hit it, because yeah, we've already hit it. We had the possibility of a missed daily pivot, but we hit it last night. It's kind of hard to see, but we did that liquidity gap right here. and ran back up, closed the gap. All right, so we could still come down, hit the floor pivot. If we break it and get underneath it, S1 is the target. 66.92 cog line. Imagine that. It just lines right up on a cog. All right, last week's range from out here isn't really helpful, except that we're tied into this cluster right here. This 50-point range from 6750 to 6800. It's not really helpful, except that we know we got a GTFO, right? We got to get out of this range. And it's our own doing. So we're magnetized on the lower edge of that value area. We're kind of just cutting in and out. It's really tight, and that's what we got to break. Now, it's worth looking at what we have for the week so far and what it's really offering us. Throw your 111 and 1236 on that, and there's your game plan. I know it's a little messy, but it gets it done. So we got a classic D-shaped distribution on this previous node. To the upside, we've got the point of control at 68.73. No reason to think that we're going to get up there and test that or break down, really. I mean, if NVIDIA is going to be the excuse, then the expectation is that we go sideways into NVIDIA's earnings. I'm just not exactly sure that it's going to be the excuse that everybody's looking for. Ten-day, 30-minute volume profile in TPO. This thing is pretty nasty. And we've got these lower dips here and here that's going to keep it spread out for quite a while. The point of control that we have across the top, we're going to end up losing that very likely at some point today. The question will become, where the heck is it going to go next? Wherever it goes, it's likely transitory. Like that, huh? I was able to get that word in there after all. If we were running that drinking game, well, we'd all be hitting Bailey's early this morning. It's likely not going to stay there very long. The TPO has already highlighted the most likely outcome when it does stop moving, 67.65. So we could hit a couple of these over the next few days and then finally have it rest down here. The major question is going to be, are we going to be above it or below it? Now, if we're just there and we're chopping above and below, then it won't act as a support or resistance. It'll be like a zone and we'll just cross back and forth through it. No big deal. But if we're, say, way down at these lows and it shows up over our head at that spot, when we come back up into it, it will be resistance. Or if we get back up to these highs and it gets moved down and we come down into it, it will act supportive, or we would expect it to act supportive. So we need to see what day it actually gets moved down and then where we are when it finally gets there. But that's most likely where it's going to end up. It's just going to have a busy week of moving through these different levels. We don't have a new VPOC from Friday because we've cut through that level. And the one that we hit on Friday, we're done with it now. So we don't need that one anymore. We don't have anything new to add here. Kind of zoom out and look. Yeah, we got nothing. Well, the buyers didn't get exhausted into that high. There was a bunch of sellers waiting there. So at least this time frame has a little something to offer. It's really thin along the low. We'll see if they come in and want to run some defense down here, but there wasn't anybody there this morning or last night. All right. On Friday, we get a chance to measure the anticipated range before it gets set in stone. And then on Monday, we get to see what we really ended up with. Compare it to last week's range. So we can see that this week's range is just a little bit bigger than last week's range. So the market is still expecting volatility and they're running wide ranges. And they're putting their money where their mouth is, right? Because this range is based on actual trades, not on surveys or people's feelings or emotions or technical analysis or anything else, right? This is based on the money they spent, the trades they're holding. So they're pricing in volatility for the week. And judging from that, they're thinking that this week is going to be a lot like last week. There's a little bit of a tell in there. Remember, it's an earnings week for NVIDIA. And I remember that narrow week that we had, that was like one of the narrowest weeks that we've had in the books for a long time. It was projected in advance in the options market as being a hurry up and wait week. You see, when they know events are coming, CPI, PPI, non-farm payrolls, we end up with these really narrow weeks because they anticipate that those volatility suppressing events are going to hold us back and we won't do anything through the Monday or Tuesday in front of that big event. Well, on the one that I'm thinking of when NVIDIA really held us back, they priced it in that it was going to hold us back. They're not pricing it in this time. Which means it's more likely we won't see the impact of NVIDIA's earnings holding us back until the day of. So Wednesday morning. By Wednesday, we could end up with a hurry up and wait on that day. But otherwise, this says don't expect it Monday and Tuesday. To be fair, that doesn't mean we have to run. We could still go sideways anyways, because this isn't going to make us move. This is just a projection of what the market thinks we're supposed to move. Traders do not anticipate that NVIDIA is going to hold us back Monday and Tuesday. So there you go. We're still below the 10-day, but not in an exaggerated fashion. We're not even down 1%. So this is just some decent negativity. You can see when I look back here how it can get really negative, and we're not really negative. I got this imaginary collar around 1%, and we're not even there yet. So yeah, we're a little weak. It's okay. It's not a real big deal at this point. We're still dancing around that 10, and all's good. But it does show that we haven't moved too far too fast, and it does not owe us any sort of pullback on the daily. Now, looking at the weekly, we're still above the 10 week, which is, like structure. And we could use a really good dip like we had back here, but we haven't had one in forever, right? Since April with the bond vigilantes and all that shenanigans. We've been getting these lower highs, and since this high set, we haven't had another high. Wouldn't surprise me if we get a bump to the upside and stretch a little bit away from the 10 week. It doesn't owe us that. Just, looking at the wave that we've been getting, that would make sense. Otherwise, we're fine here. We're not overbought. We're not oversold. We're not overextended. We haven't moved too far. It doesn't owe us anything, and we're not broken. So, yeah, got nothing. A lot of stuff on support, but not moving. Looking at what's down this morning, we got China down. Mag 7 down volume is down. It's a double negative. Chips, but barely chips, right? SMH down a dime, barely down at all. So we got a little bit of down stuff, but not the right sectors or not the right strength. So a little bit of weakness, honestly, not a bad thing. I'd rather fade at the open into the open on Monday than have a gapped up Monday. All right, looking at what is up this morning, we've got gold miners, Bitcoin, communications, but communications, I mean, it's not up enough, right? Our benchmark is 0.5%, and most things this morning are not up or down that 0.5%. So we really don't have a lot. It is nice to see that Bitcoin's up this morning, but over a 5-day period, Bitcoin was down more than 12%. Of course it's up this morning. It's getting a little bit of a dead cat bounce or a relief bounce or whatever you want to call it. But that doesn't mean that it's bullish, right? It fell a long way and now it's moving back in the other direction. I don't take that as bullish yet at all. So, we do want to see bullish behavior in Bitcoin because it is that animal spirits or risk on and blah, blah, blah. If they're not willing to take risk in the most riskiest asset, why would they take risk anywhere else? But that's not taking risk. That's just a bounce after falling a long way. And it's very likely a bounce into some resistance before it rolls over, breaks whatever we bounced off of, and then falls even farther. That remains to be seen. So take that Bitcoin bounce with a grain of salt. Otherwise, the miners, they're moving in the right direction, but they've got a long ways to go. Mag 7 is up 0.25%, but it was down 4% over a 5-day period. So again, a little bit of a bounce after falling a long way. This does not look bullish this morning. It just looks like they're trying to hold the line. All right, so you got the levels, you got the plan. It's pretty simple. We're in a range. That range happens to be our own Globex. If you get outside of our own Globex, then you run yesterday's range. All right, to the upside, we're already out, so we would just be running. But to the downside, we'd have to work our way all the way through yesterday's range and then get outside of yesterday's range to the downside and then begin to expand. plenty of targets that I've already laid out to the downside, and that's how we want to run it, level by level, all the way down or all the way up. It's just as easy as that. We got to get out of the box. So that's what I got for you guys. Be careful, be safe. I'll see y'all tomorrow.